And there you have it, the closing bell at the New York Stock Exchange, ending another day of trading. The Dow Jones started the day with gains, but fell more than 500 points by midday. It rebounded a bit through the day, though, ending down around 176 points. It was a familiar story for the S&P 500 and the Nasdaq, which spent time in both the red and the green. They ended down more than 5%. Yahoo Finance reporter Alexandra Semenova joins us now for more on this. Alexandra, great to see you again. So what was driving the market? A lot of volatility today.
So another choppy trading session to start off the month of June. Investors had turned the page on May, but carry over the same concerns about inflation and the U.S. economy. We actually saw stocks open higher to start the day. Sentiment was buoyed by a positive earnings report from Salesforce after the company indicated that it didn't see the same macroeconomic tailwinds that some other corporate peers have. But that quickly changed early in the session. Stocks fell about 90 minutes into trading after remarks from JP Morgan CEO Jamie Dimon, where he suggested that the economy is in for a hurricane as the Federal Reserve moves to tighten its monetary policies to combat inflation. So very consequential remarks there from the CEO of the country's largest bank moving markets.
For sure. I just want to pull back a little bit so we can get a larger picture on the U.S. economy by listing just a few points. The S&P 500 and Dow Jones ended the month of May with slight gains. The manufacturing sector, which accounts for 12% of the U.S. economy, reported growth. The number of job openings is decreasing, which the Fed sees as a positive sign. And there have been signs the housing market is starting to cool down. So these are all signs that the economy is still strong and moving in a positive direction. So why do we hear all these warnings of a possible recession or a sort of a very negative outlook?
Well, the takeaway here is uncertainty. The economy still continues to be in a pretty good place. The labor market is strong. We're going to have the jobs report out Friday, which will be closely watched by investors. Consumers are still spending money, even though prices are high. But investors are worried that if the Federal Reserve moves too aggressively to rein in inflation, it might tip the economy into recession. So it's really the uncertainty that is moving markets. Until investors get a bit more clarity about what the Federal Reserve might do going forward and when it might cool down its inflation-fighting efforts, then we're going to see that volatility that we've been seeing in recent trading sessions.
All right, so let's talk a little bit about crypto, because talk about volatility. I guess that category is used to being volatile, but it was even more so in May. So what's going on there?
Well, crypto is experiencing the same volatility that the stock market has. The same factors that are influencing regular equities are also influencing cryptocurrency markets. It's the uncertainty around what might happen next. You know, previously, crypto has been seen as a hedge against inflation, but we're seeing it very much move along with traditional investments. So that hasn't been the case with the volatility that we've seen during the month.
All right. A lot to talk about, a lot to unpack. Alexandra Semenova, thank you as always for your financial expertise. We appreciate it.
Thank you so much.